following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 1st, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. Of course, you don't need me to tell you what they're communicating, but I'll do my best to make sure that we look at both sides of the trade. So I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. Love the conversation. 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started out. Wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 322 points. That's trade out at 21,134. S&P is up 33 points at 2396. You've got the NDX 100 up 56 points. The composite up 73. The Russell up 26. That's 2% to the upside. Leading the charge, well, just behind it, a hair on its chin behind it. The transports are leading the market on the way up right now, a little over 2% to the upside. Gold is back $6. Silver is flat, unchanged for the day. Light sweet crude basically flat out here. Leading the charge, dollar-wise, the upside. Individual stock-wise, you've got Dicom Industries, not to be confused with a daikon radish, which are really great, especially the ones that are pickled in yellow. And they call those, what do they call those? They call those takawan. That would be the name. Excellent with a little sake. We don't have any sake as well. We do. If you allow me to break here, I'll go to the refrige and we'll pull out a bottle and we'll go ahead and drink that. I know you want to talk about that. Also leading the charge out here, we got BlackRock. That's up 3% or $11. Google's up $10. Priceline up another 8. Martin Marietta up 8. Wynn Resorts up 7. Lowe's is up 7. There are some things moving to the downside, and that is Palo Alto Networks off $34, 22%. That's a nasty move. 13 million shares behind the move. Stone Energy Corp down 29%. Tesaro is off 4% or $8. Cyber Optics down 7%. Dine Equity is down $7. Babcock and Wilcox down 6. So there's plenty to look at, but I want to look at what you want to look at. So the first thing is, okay, so what's going on in the markets? Where are prices headed to? Where's the next potential stop out here? All those types of things. You know, if we just take a look at the daily equity futures contracts, get our head wrapped around this, as long as the S&P closes over 2370. I can't imagine that we're going to see those kinds of gains erased today. It's above all market profiles. It's just uber bullish out there, if we go ahead and use that word uber. If we take a look at the NQ out here, that's above its profile level. It's daily 5361. Hey, let's talk about the Russell 2000. We had mentioned that earlier in the week on Monday, a brand new weekly profile had formed out here. Really tremendous support at 1346. That's the bottom of the box. That's where both the center of the box and the point of control are at. Price has never gotten down there. What's more important, and what's more important on a weekly basis, why is my chart doing this right now? There we go. Is if it closes above 14.1060. Remember, this profile here very bullish from the standpoint. Well, it is very bullish, and now it's even more bullish as we speak. But the number to be watching for inside the Russell 2000, 14.1060. You close above that come Friday. It's only Wednesday. Boy, it is telling you strong. I did say like bull out there, and that ain't no bull. Now, that's what's going on the daily time frame charts out here. For those of you wondering, is there any chance of some kind of a pullback out here? Well, let's go take a look at the ES Mini 30 chart, ES Mini 30-minute chart. It's the one that would give us the best indication that it could. And I do say could because we are now in a confirmed seventh wave move. That letter G singing in the key of G out here. Now, the key here, this may just be nothing more than a little bit of a pullback here, 23.95. I would not be surprised to see 23.91 get tested. But we'll come back to this in a minute. Let's first go out to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing today?
Pretty good, Steve. I got a quick question. On my chart, on my phone, and it looks like we're forming a little bit of a hammer.
You're looking at now. I didn't hear you. I think it's the GDX. Is that what you are? Is that what you're looking at?
That is correct. If you think now would be a good time to get back in.
So a great question. So we're going to pull up the chart for the GDX. I think the software on your phone isn't properly pulling up today's candle.
Okay.
So definitely not a hammer. It may be on your phone. You know, I don't know where the data is coming from, but as I take a look at it through my eSignal platform, it is not a hammer candle. What we know, and let me go ahead and turn on a couple of things out here. If I put the volume characteristic out here, today so far 33 million shares. Yesterday was 83 million shares. And this is coming back into the area where this had broken out. But I'm going to answer your question. Is now the time to step into it? And I'm going to say it is not the time to step into it just yet. You just want a little bit more information. It's possible that it is. And the reason why I say it's possible is we've seen the Japanese yen move up and reject a key level out here. But I say just by the hair on its chinny chin chin. That key level happens to be, Mike, the price point of 113.70. We're trading at 113.67. So it's not enough evidence for me just yet that this has rejected price. Even if it does, it still might mean a sideways to lower move inside the mining equities out here. So I would prefer that what you do with regard to GDX is just sit tight for a little bit longer. Ideally, this thing will pull back, believe it or not, to a price point of 20.71. So that's what I would just wait right now for some clearer signals, and we don't have them, in my opinion. Are you out there, Mike? We might have lost them because of the cell phone. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 312. S&P is up 32. Let me go back and just re-emphasize also some other things that I'm seeing inside of the GDX. And it's a little bit difficult to call with regard, and it's coming down into a breakout area that you and I looked at with light volume. So, it has come back to a breakout area. So that's a positive. On this chart right here, I just really have two indicators. I've got the Tom DeMark setup series of counts out here, and those are labeled with black numbers. Of course, the only numbers that I actually have on here are black, so that's kind of redundant. And the way that you can utilize that system out here, just the old 9 count, and there needs to be 9 consecutive closes. In this case here on a rise, and with price we're rising above the high for bars ago, and to the downside the exact opposite. And you can see that today, because 4 bars ago inside of the GDX way back here, you might say, where's way back here, Steve? I'm looking at the trading date. It looks like a February 25th and somewhere around 24.16. I'm going to go with the guess at this stage here that price is going to close below that. Then today's going to be number 9 with regard to those counts to the downside. So it's going to qualify as a TD setup today. When today's bar, number 9, is trading inside bars 5 and 6 out here, then it's an indication that price is likely to slow down. Selling has really dried up out here. You can see we're nowhere near bars 5 and 6. As an example, if we go back to the most prior TD 9 count setup out here, we can see that as bars 8 and 9 were forming, this is back in the trading days of January 24th and January 26th, they were trading inside of bars 5 and 6, at least bars 6 out here, actually probably both. And then the market just kind of went sideways up until it broke out really on February the 3rd out here. And so again, and you can see this occur time and time again. If we go back to the one prior to that, January 7th, bar 9 was forming. It was trading into bar 5 out here, and we just saw some sideways movement. We don't have that pattern as we speak just yet. It's come back to support. There's no question about it. It's going to be key. What's really going to be key here, just as we were talking about, is the Japanese yen. What is this little sucker going to do? And it wasn't able to bust out the lows yesterday. You and I took a look at that. We said that we came up with a trading strategy, a potential trading strategy to watch how the market was responding during the president's address to it. It wasn't really a State of the Union speech, was it? A state of the state, the state of the something speech out here. We don't really care. We just wanted to watch what the market was doing. And we, instead of seeing the Japanese yen get stronger, in this case here move lower, it was getting weaker. But that was really before the speech had started out there. And now today, price tried to bust through the resistance of its daily profile. That's where it's sitting right now. If it does break above that, close above that, really not break above it, but close above it, then we should see some additional selling pressure inside of Goldilocks. So, if you're a day trader, you've got some information that you can utilize with regard to your trades out there. So hopefully that assists you and all the others that have sent in requests to go take a look at the mining equities and so on and so forth out there. Let me see if I've got any other requests out here by email. And yeah, Kevin actually sent in an email, and Kevin was just saying, hey, in essence, so what is going on? And what Kevin was referring to with what was going on, not with regard to me. The question was, what is going on with the S&P up the way that it is, 2396, and the VIX index still trading above the 50-day. Let's just go to this chart here. It's a lot easier, right? 50-day exponential moving average, 1196. It is trading above that. Of course, Kevin said, something to think about. I don't know anymore. Look, there's a pattern that's much worse than that. Which is this one, where we have a rising bottoms closing price of the VIX index while price is moving higher. Eventually, that unless it gets resolved, it's led to typically some type of retracement out here, some type of top, some type of continued move higher. And we don't have that in play. Well, we have that pattern in play right now. But other than that seventh wave move on the 30-minute chart out here, I don't really have a lot of other patterns to say, this is just a fake out here. I thought, and I think we took a look at it yesterday, that this was really the fake out. That was like, what? The tool's not working. Don't totally ignore it. But, man, do not make your decisions based upon this tool, because it just simply is not working. And when it doesn't work, you just put it off to the side. When it starts working again, then we come back and we take a look at it. Did have a request here, or Warren in Denver was making a point about the housing stocks taking off today, and I think the request was to go take a look at a couple of them. So let's do that. MDC was one of those equities. That is MDC Holdings, and it is at a higher high, not all-time highs. If we take a look at this, no housing stock, to my knowledge, is at all-time highs. Now, somebody will probably send in a card and letter and tell me I'm dead wrong about that. But in the case of MDC, Toll Brothers, Lennar, they're nowhere near their highs back here in the 2005, 2000. I don't even know if that's a correct tick, in 2007 out here. But let's just take a look at it from a daily perspective. And here's what I can share with you is that today we've got price moving higher above a market profile, previous swing at 771 in volume, and today you're only at 274. It's not an enthusiastic move to the upside. Let's take a look at the B point of an A to B equals CD. Let's see if that's been taken out with volume. That's December the 8th, 382,000 shares taken out at 948. So there we do have some mojo. That mojo is going to give us a price projection, an A to B equals CD price projection. That's going to give us a 1-to-1 that equates to a price area of 3187. So, Warren, I would say to you that it's not so important as to what it's doing as to 3 days ago, as to the fact that it's above market profiles. We have a confirmed A to B equals CD to the upside, and 3187 is likely the target for ticker symbol MDC Holdings out there. Let's go take a look at Lennar, LEN is a ticker symbol. Let's see if it's really doing the same thing out here. Trading out of 5017, dealing with some swing points back here in July, which had 1.5 million shares. You're at 1.8 million shares. That's looking pretty good. So that says there's a larger A to B equals CD pattern. You're above profiles. Let's turn those off, just simply because they clutter the chart, and there's no reason to clutter the chart out here. Here is the A to B equals CD pattern that is out there, that's being confirmed here today with your A point being down here on the trading day of February 11, 2016. Your B point was that swing from July 27th, 2016. Go on, grab it. There you go. And your retracement, your C point, took place November 9, 2016. So Lennar Homes is going to target the 5214 area. That doesn't mean that's where it ends. Remember, just because you complete a 1-to-1 A to B equals CD, you don't just sell the holy heck out of it. You've got to do more work than that with regard to that pattern. But that becomes your first price target in Lennar. Dow's up 304, S&P's up 32. We'll go check the email, see if there's any other requests. Inside the Tiger's Den, there's a request to take a look at the IBB, so we're going to do that for S&P. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 307. S&P is up 32. So for S&P in the den, wants to look at IBB, but I'm not sure what S&P, what you're looking for. But I'll just simply tell you what the chart is communicating to both you and I. Now, as we speak right now today, this is cleared a significant level of resistance, that being its TAS weekly profile. That's a horizontal green line. Any close above 299.49 says higher price should be expected. Volume so far, 1.1 million shares. The swing point that it's going against is from September 23rd. That has 1.06 million shares. So you're already above a swing point, a prior swing point with volume. That says it wants higher price out here. Where it's going to head to, we'll try to figure that out. We can see a series here of higher lows out here forming after this day back on November 3rd, 2016. Now, what this equity did, let's turn off the profiles. Similar to GDX as an example, is that price came back to an area where this thing had broken out. So in the case of the IBB, remember, gaps are your friends. They are clear signals of something that is breaking out. It's like a wide-ranging bar in this case here, and it is a wide-ranging bar. It's just mentally you've got to fill in the gap, so to speak. In this case here, and so when people talk about gaps will get filled, they're really just saying price will come back to a breakout area. And when it comes back to a breakout area, does with light volume, that's really your trigger to go along. So in this case here, that's why I said intraday traders, Mike and Norman Beach, I could see where he would want to pull the trigger on GDX. In the case of IBB, that's really what it did, because price came back and tested the gap on December 7th, 4.2 million shares, going against 11 million shares out there. I mean, does it get much better than that? Well, it did. It got a little bit better on the trading day of December 30th. Now, holiday trading, volume there was 1.1 million shares, but nonetheless, a third test of a breakout area, a third test of anything, typically gives you a nice level of support or resistance. The most important, most fundamental thing for you and I to do at all times is try to identify support and resistance, right? So in this case here, price came back, and now it's off to the upside out here with regard to the IBB. Now, are there any problems inside of the IBB? Well, price is moving higher, doing it with less energy. That's why we have the price relative strength divergent pattern out here. The way I look at it, it's either in wave 5 or wave 3 out here. No big deal. Not until a bearish reversal signal were to occur would it be a big deal, and not until price were to close below Stevie's red line, which is 295.07. Happens to be lining up pretty closely with regard to its daily box out there. So if you're short, there aren't any signals here to say to be short the IBB. They're all suggesting that price is moving higher. Now, moving higher to where? That's the question. Well, remember we talked about these gaps are our friends out here. Well, there are a couple of open gaps to the downside. One of those happens to be at around the 318 level. Volume there about 3 million shares, so that's not really a big deal, although it's it's not huge volume, but it is volume. There's another gap out here that from the trading day of, let's put the price out there, December 31st, as it is, 338. So at this stage here, S&P, it looks to me like what the IBB is communicating to you and I, lack of any failure today, and that failure would have to be closing below this swing point out here. So we'll give you that number as well. And that would be 301.80. Remember, volume on that swing is 1 million shares. We're already above that area. Even if it closes below 301.80, it's attacking that with volume. It's going to be up there and attack it again. The question is it going to go ahead and take that level out? And if it does, what you should be looking for is 318 or 338. So I hope that assists you with regard to what the biotech sector inside the NASDAQ is communicating to you and I. I had a question here from Jeremy. Jeremy said, hey, a week ago or so, you showed us a 2-minute chart for the TVIX. And I was and also with regard to market profiles out here, specifically market profiles. Can you use that tool on other instruments? And Jeremy, absolutely you can. So and thanks for sending in the email, much appreciated, and the question. So I went ahead and I produced this chart for each of us to take a look at. Jeremy sent that message in earlier this morning. So where did I put that chart though? Here we go. Here are two, by the way, two 2-minute charts. I'm going to go ahead and I'm going to turn off the NASDAQ. We can turn it back on. but let me go ahead and turn that off. I just want to make this a little bit larger, a little bit easier for you to see. Looks like I got to turn that off and that off. That's going to make it larger. I'm going to turn off the volume as we speak right now. So all we're looking at is the ES Mini. And, I didn't mean to turn that off, though. Here is the ES Mini. And, again, a 2-minute chart. We're going to go ahead and take a look back here, starting from about 7 o'clock this morning. Now, the key with regard to these market profiles, there's several keys. Number one, it's a little nuanced, but I have shared this with you and will continue to share it with you because it is just so important. If we take a look at coming back to 7 o'clock this morning, there was a profile that formed out here at 646, Jeremy. And what we can see about this profile is we can see that the center of the box, even on a 2-minute basis, closer to the top than to the bottom. This says that in this pricing area, which is basically 23.74, it's not a big one, to 23.73, just 1 point area. Still, it is sellers in control of this area, and that's after the prior box also being in that same structure out here. As soon as price closed above that, an important level of resistance failed. That could have been your first signal that the market was going to add to the gains that were already present, because it was about 2 o'clock in the morning when the ES Mini began turning around. It was not when the presidential speech was done. Not even close. At least I don't. Maybe he was talking till 2 in the morning, but I don't think that is the case out here. So you got your secondary signal right in that 7 o'clock time frame. Now, once we start to see the key to this and the trick to utilizing these shorter term market profiles are watching where they continue to form. Now, you're not going to buy the bottom tick, and you are not going to sell the top tick utilizing this tool and the strategy, but they're really great. It's another great momentum tool out there to be able to utilize. You can see all of these boxes forming at higher levels out here, and really not breaking by much the very bottom of any box out here. And now all that changed a short time ago. The very first time we saw a lower box form was at 12:42 this afternoon. And we have a brand new box that has formed at a lower level. So that says there could be, that happens to line up with our 7th wave move in the ES Mini on the 30-minute chart out here. But we'll just continue to watch this for the next 20 minutes or so, the next 2-minute chunks. Now we're going to take a look at other things. But yes, you can use the same tool that we looked at on the TVIX in the futures. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're going to take a look at Taseko Mines. TGB is the ticker symbol for Danny in New York, who is in this equity at several prices. And congrats to you. 28 cents, 47 cents, 95 cents. Right now it's trading at $1.44. So, what's great here is, so these are just like, you guys are rifling off the stocks. It's just random. We're going back. We're taking a look at these patterns that complete time and time again. Let's get rid of the TAS profiles for a moment, because here's one of the things. Well, first, let me put it back on and come back to the early stages. This way I can walk you through it, right? It's just like the 2-minute chart that we took a look at. If we take the TAS box, I'm going to turn off the daily. We're just going to see green lines out here. See, in this price area here, and I'm just simply going back from September 2016 all the way up until November 10th, 2016. Here we can see price breaking above a weekly profile. That structure said that it was sellers in control of the price area between 54 cents and about 44 cents out there. And once price broke above it, in this case here, it did it with volume. That was a nice breakout. That was a gap. That was November 10th. Gaps are your friend. Now we go ahead and we turn off those TAS boxes. And so what does TGB do? It comes right back into the breakout area and does it with what? Really light volume. 340,000 shares was going against 1.8 million shares out there. That was at a price level here of 49 cents. And Danny's in at 28 cents out there. So he was buying it during accumulation, but his second order was at 47. And this was at 49. So congrats on that second buy out here. And so now let's go back and turn on the profile. So there's where you're buying something coming back into a breakout area. Yeah, hence the GDX is doing that as we speak right now, or so far it has done that today. Let's turn the dailies back on, because I just simply want to be able to share with you. And you can see how each of these other profiles, dailies are forming above prior ones, weeklies doing the same. Now let's take us into where we are at today. Let me actually turn off price just for a moment. So we have a brand new profile that is formed here today, Danny. This is your lucky day, because this is giving you some price information. What we can also see, maybe you can just barely see it on your screen out here, but I can share with you that the center of the box, which is priced at 136, is closer to the bottom of the box, 131, versus the top of the box, 147. So that says that it is buyers in control with the price area 131 to 147 out here. The weekly profile also is a bullish structure. The bottom of its box 121 versus the center at 129. Those two are much closer together versus the top at 155. As long as price continues to close above 121, you're in good shape. And all of that is above your buy-ins inside of this equity. We do have a new daily profile, even though it's structured from a bullish configuration. It did form below the prior box out there, so it's okay. It's not the best, but it's okay. And in light of what's going on with regard to the mining equities, hey, not that big of a deal out here. So as long as price closes above 147, you're trading at 145, then price will go tag that 155 level again out there. Then, because there's no other profiles, you just simply are paying attention to what's going on at the swing point. The swing point is February 13th. 2 million shares out there. You'd like to see price come into that area with more than 2 million shares out there. That would be a positive. But otherwise, if we put the health-omometer to this equity, it looks pretty healthy to me. Now, you really want to see this thing get above 150. And 150 happens to be Stevie's red line, that oscillator on change line. We put that chart up here just so you can see it. So we still have even though with a nice day today, it's still telling us that the price oscillator, that's the bottom chart out here, that's the difference between two exponential moving averages, 19 and 39, has turned down. It says more retracement can be in store for it until that level fails, or until price is able to get above that area. So more turning sideways, in essence, Danny, is really its message to both you and I. But congrats on that trade out there, and that is Taseko Mines, TGB being the ticker symbol. And I want to take a look at whatever it is you want to look at, but I don't see any other emails out here and no more requests in the Tiger's Den. Please send me all of your requests out here. So we'll just go back and take a look at, let's see, what haven't we really covered here? I mean, it's a slew of stuff for sure, but what have we? Let's go take a look at some of these equities just literally falling apart at the seams. Palo Alto Networks. So what is this here? Just simply they're guiding below, disappointing earnings, the whole 9 yards out there. Man, let's go take a look at where is this sucker headed to. I'm going to turn off the profiles because there's a little problem way back when. So let's go take a look at where this is headed to. So right now, in one single day, it's lost a pretty substantial amount of value. And it's traded all the way back to a swing point low. That's a natural target area, June 27. There's only 2.9 million shares there. And today you're down with 14 million shares. Now, it's holding that area. Not necessarily a good thing out here. If we take a look at a prior swing, even further back, February 8th had 5 million shares. You're trading into that one. That's one I would be using. It's one we are going to use when we draw our line across the sand. So this would say to me, Palo Alto Networks is going to go test or blow away 111.09 out here. And if it blows it away, it's a huge A to B equals CD to the downside out here inside of this equity. And there's no other floor established until about the 80-ish mark out here. So 111.09 is a real important area for Palo Alto Networks, PANW. Also getting crushed here is Stone Energy, SGY. Announces successful what? What did they announce here? Announces successful completion of financial restructuring and emergence from bankruptcy. Okay, well, that is nice that they have done that. It is still getting crushed down 30%. Oh, can you imagine that? Nobody is in good shape inside this equity. Let's not waste another moment there. Tesaro, TSRO, being the ticker symbol, down $8, 800,000 shares behind that move out here. Now, not a bad deal. At least doesn't look like it. Just really trading sideways into that little wide-ranging bar on February 8th. That had volume of 2.8 million shares, only 800,000 so far today. So this doesn't look too shabby. However, it would suggest to both you and I that this is going to pull back further into the breakout session. So if this were an equity that you were looking to get into, that being Tesaro, let this thing pull back, attempt to pull back into the 160.56 to 165.08 type area. Monitor the volume. Want to see volume drying up as it makes that pullback. Again, that is Tesaro Inc. TSRO. We got the Dow. She's up 310 points. The S&P is up 33. You know what kind of day this is. This is the kind of day where the S&P closes at its highs, where the Dow closes at its highs as well. Don't be afraid of those gaps out there. They're just signs of strength. Yeah, eventually price will come back to them, but it doesn't have to be tomorrow or next week or even next year. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So what to do with the next 4 minutes out here? Look, until we see some significant patterns form out here that suggest that a short-term top is in place, and one of those patterns, we do see a signal coming here from the S&P 500. 2389 happens to be one of its both weekly and monthly horizontal trading range levels out here. So 2389, we're trading at 2396. You know, this week, that's a monthly chart that we're looking at, by the way. Just put it to the little bit smaller area here. We'll take a look at the weekly. 2408 looks like that is where price wants to head to. You're at 2396 right now as we take a look at the weekly horizontal trading range level here for the S&P 500. If I take a look at the Dow, is communicating to you and I that it wants to head to 21,391, so another 250 or 60 points to the north. In the case of the NDX 100, big monthly horizontal trading range level is where it seems to be targeting. That's the 54.26 area out here. So until we see some type of significant reversal sign, pattern complete, the market just simply wants to continue to churn higher out here. There are some signals of weakness. All those can be resolved very easily. Well, if we take a look at, they can be resolved. They haven't yet. Here's the New York Stock Exchange with regard to new all-time highs. You know, you're at 331 as we speak right now. A few days ago, back on January 25th, you were also at 331, but it has not taken out the high that we saw with regard to all new 52-week highs of 485 back on December 8th. Has a declining tops pattern. That can be resolved. You can't use this as a signal. It does tell you there are some problems underneath the covers. Inside the NASDAQ, we take a look at it. It, too, has a problem. Here's your declining tops line. We're just looking at new 52-week highs out here. Back on December 8th, this thing had gotten up to 557. Right now, today, you're 281. And just a few days ago, February 21st, this thing was at 329. So some problems inside of the NASDAQ, inside of the New York Stock Exchange. Of course, two indices that you really can't trade, right? Not with regard to an ETF out here. One that you can trade happens to be the Dow. And if we take a look at the Dow out here, what this is actually doing is making higher highs. So now we've got 14 of the 30 Dow stocks at new 52-week highs out here. In fact, if we just pull this back, you're at the highest level with regard to stocks at highs out here inside the Dow. Come on, populate even further out here. Well, I guess I can't. This is the highest level. So now I'm going back. This pulled me back into 2009. I guess for some reason the data is not pulling back further. But as we speak right now, today, daily chart, this is the largest number of individual issues with inside the Dow that are at all-time 52-week highs out there. And this thing has actually been making a rising trend line versus a declining trend line out there. So, that's not just like one stock or two stocks or three stocks. There's at least 14 stocks inside the Dow that are, so half of it basically is dragging itself higher out there. So, folks, it's a wonderful Wednesday hump day, as they say in the gym. I don't know why they say it in the gym, but they do. And so stay tuned, because that means our favorite polar bear, yours and mine, David White, he's up next on the Tom O'Brien Show from 3 to 5. And anticipate the markets to close at their highs. It's a freight train. No shorting allowed. Take care, folks. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.